Hey, good afternoon, everybody. This is Rick with Hit and Run Candlesticks. How you doing? Markets all closed up on this Thursday, October 12th, 2023. I have a few charts I want to talk about here. Let's start with JP Morgan. Earnings will be announced tomorrow, so a lot of eyes are going to be on this JP Morgan here. Really, you look at the chart, and here we are below the 50 period moving average and kind of hanging that way. 50's pointing down. Here's the 200 period moving average moving up. And we bounced right off this a few days ago. Not quite the perfect hammer. We did have follow through, a rest day, and follow through up. I think the best way to look at this chart is I'm going to draw some lines on this. There we go. And this area right there, those three really tight bars right there, that represents about the 50% area of this move from the top to the bottom right here. So, of course, earnings is a real game changer. We could pop up, be bullish. We could pop down and be bearish. It's all about, the earnings here. But right now, I look at this chart and I see this trend moving down right here. Now, above this 50% line, I'm going to look at that as being bullish. So let's just put a little bullish box up there. And then below that 50% line, I'm going to look at that as being bearish, just like that right there. So depending on what the earnings do is the way we'll look at trading this. And we'll, watch the candlesticks, watch the power of the candlesticks, the type of the candlesticks, the maybe even the next 3 or 4 days to develop a candle pattern in there on whether we're going to play this long or short. Okay. Another chart. Well, let's just take a look at the SPY real quick and the Qs, and then we're going to take a look at AMC a little bit. So the SPY here, we're in kind of a dilemma, I think. I talked about this in the trading room on this big candle here. When was it? Friday on the 6th. We came down and hit the 200 period moving average, kind of bounced. That's also the 500 SMAs in there. We put this big candle in, and man, I got to tell you, I just feel like that candle messed us up. So a big candle, we certainly had some positive trading up. The problem that I see is this candle, this big, bullish, hungry, bullish candle, what it did is it closed the gap to a resistance area. And what that did is it diminished the area that we can trade in. It's compressing too much, which is going to create a lot of volatility and hard to keep track of what in the world is going on. Well, then the next day, it even got worse because we produced some follow through off the bullish engulf, and that compressed us even more and tighter in there. And now the recent 3 bars, you can see these 3 bars here, how they're giving us this consolidation, this compressing consolidation. Now we've started earnings season that's coming up. So what we need to watch for is, are we actually going to break out or are we going to break down? Anything in this area I think is super cautious. Pump the brakes, back off some trading a little bit. Maybe this is my plan, sharing my plan out loud with you. I hope it's helpful. Another thing, I look at the SPY here, and honestly, probably not too bullish on the SPY unless we can break out about 445 here. And then for the bearish side, if we kill that 200 period moving average, we could have a real problem to the downside. So we'll be watching that. Let's take a look at the Qs real quick, and then we're going to look at AMC again, okay? The Qs here, they ran up and acted just fine with this trend line up here. Oh yeah, we're going to look at Google, I think, too. Acted just fine up here. We came up to this resistance line, and now we're just kind of beating it up, finding a way to get through or maybe even give up. So a breakout pretty much of today's high might set us up for some bullishness. And the way I would probably look at that bullishness is get that bullishness, watch for that pullback, and then we'll look for whispers of buying in here. And that might be a play on the Qs right in there. On the downside, we start to come to the downside too much. That could put us in the poorhouse and really set us up for downside experience here. And probably what I'd be looking at is if we got through 363, we could be in a real bearish move to the downside, coming down to the dotted deuce or even the 200 period moving average. Really a cautionary area right now. Let's take a look at AMC. There we go, AMC. Now I ended up closing my AMC today. We had just slightly over 60% profit on it. Bought it right here, closed it today. There's nothing about this chart that looks bearish, but there's all types of risk to have out there. And one of the risks that I'm always thinking about is if you've got profits on something, 60% profit, then that's at risk. That's at risk when the market is a little bit, when you're unsure of the market, when the market may be trying to give you some bearishness, and you're looking for something like this, being bullish. A simple pullback wouldn't be horrible for this chart, but what it would be horrible is for that 60% risk I had out there. So I ended up closing it. I am in the mood to buy this again. I'm just going to have to wait for a better setup, maybe in a market that's giving me a little more confirmation as well. Beautiful rounded fry pan bottom here. I still see some upside on it, and we will keep all members alerted on this as it unfolds, and we can maybe put another trade on. Take a look at Google real quick. GOOG, there we go. So Google here, we had a nice breakout. I'm kind of watching for a little bit of a buy signal coming in for a possible long. To be short, we're going to have to break down through here. Probably going to lower that a little bit. There we go. If we get down below 138, that might set us up for a short to the downside. But right now, we're still holding a breakout here. So what I'm looking for is a buying opportunity. I'm going to be looking for a 3-8 trap type trade. And the 3-8 trap, let me move this out of the way. Let me extend the T line here. The black line is the T line. I'm going to do it like this. Yeah, like that right there. I'm going to extend it like that. And what I do a lot is just run it across the bottom where I can find a flat spot. And then there's an entry that we have perfected, and it's called a 3/8 trap. And what happens is price pulls back, trapped between the 3 and the 8 exponential moving averages. And then we'll watch that buy signal that gives us an entry, and then we look for the bullishness to the upside. There is a 3/8 trap class coming up on the 19th of this month, 7 days from now. If you're interested at all, there'll be a link down below to click on that. There's only 20 spots available, so if you are able to grab one of those, and I think there's still a few left, if you want to grab one of those. Excellent class taught by Doug Campbell, who operates and manages our Right Way Options division. So if you're interested, check the link below. Thank you very much for watching the video. We'll see you guys all tomorrow, okay? Take care.